Welcome everyone. So my name is Chiara Munaretto. I'm the co-founder and managing partner at Stablecoin Insider, and I'll be your host for today's panel as well. Today we are going to spend some time focusing on stablecoins, which, as you all know, has been a very, very high topic over the past year. And I have the pleasure to be joined by Kate Kim from KAST and Juha Viitala from Universal. Maybe before we get started, just 2 words on who you are, why you're here, and what you're working on.
Hello everyone, my name is Kate. I'm with KAST. So many of you might know KAST as a crypto card company, but we've actually evolved ever since 20 months ago, found product market fit since day one with issuing providing crypto credit cards to users, and since then we've evolved to be able to do a lot more. So you can hold stablecoin, you can spend it, you can transfer it, and you can even earn on it. So I'm actually in the go-to-market and the UAE country lead.
Hello. My name is Juha, and I'm originally coming from Finland. I'm a fairly fresh Dubainer, been here for 6 months. Thanks Anton for inviting me. Thanks Irina. Honored to be here. Proud to be in UAE. It's been a ride for the past 6 months. Yesterday I was writing a blog around real estate tokenization, which reminded me of 10 years ago I was participating Ethereum developer conference in Shanghai 2016, and real estate tokenization and fractional ownership were kind of a massive topics around the insider and behind the scene discussions, and it was kind of a turning point for my career. I decided to go all in crypto, all in what's happening here, and that's what I've been doing for past 10 years now. And I'm delighted to see the RWA's real estate tokenization is actually here now, and it's happening. 5 years ago, I founded a company in Europe. It was a stablecoin issuer. We're the first one who got the EMI license to issue euro-nominated stablecoin, and around that time, MiCA regulation was forming as well, and we were the first one to get a MiCA regulation in place. And about a year ago, Paxos, which is one of the largest stablecoin issuer, acquired us. And half a year ago, I got an opportunity to join stablecoin project here in UAE. One of the first questions when they introduced their project, I was like, why you are building another stablecoin? But after a while, I was convinced, okay, maybe we need one more. Because I think there's a massive, UAE is already, if not already, but becoming a leading digital asset hub in the world. So I think they need to be also kind of leading kind of a stablecoin hub in the world, and there needs to be UAE controlled stablecoin settlement layer here, because currently when you're minting other large stablecoins, you are kind of exporting your money overseas, and I think it would be a critical component for UAE to have a kind of own stablecoin-based settlement rails here, and that's what we are building for.
And I think it's very interesting that you just mentioned why do we need another stablecoin, because that is going to be one of the core focuses of this panel. So maybe bringing back the word to you, Kim, we know that we're heading towards a world where every major bank, payment company, and every country as well perhaps is going to launch their own stablecoins. So this might lead us to another liquidity fragmentation issue that perhaps you're already having with the traditional FX market. Mm-hmm. So how do you see this continuous issuance of new stablecoins? Do you see it more as a problem, or do you see it as an opportunity?
I think coming from like a normal user perspective, it's and obviously like the operations of how the stablecoins kind of flow, I think it is gonna arise some problems because even, for example, look at the two top stablecoins that people mostly use. It comes with a set of blockchain networks that split the liquidity, right? And I think we all know that we're innovating a lot here in the stablecoin space, and so issuance of stablecoins is not the blocker anymore. It's a matter of solving the interoperability, right? We need to solve this so that more adoption can come, and we're already doing that with KAST, right? We're not trying to make things complicated. Our goal is to offer a platform for users to it's really simple. So once you transfer your stablecoin into the app, we want to make it just shows as a USD value, right? So we're trying to our goal is to make it simple for users, and a lot of the hard things happen in the back end. So God bless our treasury team. They're the ones who kind of migrate everything so that we make it easy for the user. So I think as we do become a little bit more mature in this space, we need to tackle that, and therefore it is an opportunity for a lot of the new stablecoins that are coming into the market to place themselves and show demand, right? But at the same time, solve for the interoperability issues, because in a user's perspective, it's you want it as simple as possible. Even if our product is making lives easier for others, we still get a lot of feedback that it should be a lot more simple. And for that reason, we only right now I think have about 5 stablecoins on our platform, just because of the demand and the ease of use.
And are you planning to integrate more stablecoins, or are you just trying to offer the new ones?
In the roadmap, I think for us, again, it has to show demand for our users. I think the biggest flow you see on our platform is USDT and USDC still, even though we have, I think, USDE and PYUSD along with a few others, we still see the high movement concentrated in the top 2. Yeah.
What are your thoughts?
Yeah, of course, in a monetary market and money in general, the interoperability has been. This is not the first time we have the problem. From early 19th century in the US, there was every bank, every institution issued their own dollars, their own money, and they all had a little bit different principles. And it was mainly based on trust, what is the exchange rate, who is backing it, and so on. And during the way, there's been for petrodollar was a little bit similar, or even the current corresponding banking. There's a lot of different entities representing basically the same currency. Of course, in stablecoin world, it's as I said, there's a room for one more stablecoin. But it looks like every bank, every neobank wants to issue their own stablecoin. So it's gonna be crowded market, and it's definitely a problem how to make it more interoperable, more fungible, and I think in that sense we need good intermediaries who can use dollar as a base currency. Nevertheless, what stablecoin it's representing. So the parties like KAST or some of the banks are already swapping some of the stablecoins one-to-one with each other. Some of the exchanges. So I think in the shorter run, we need good intermediaries from exchanges to market makers to neobanks to fintechs to banks to kind of solve part of that problem. But it's interesting to see what is the end game with the stablecoins. How does it look in 10 years when? Do we have 1,000 stablecoins, or do we have 5, or do we have one with the central control, and are we going back to kind of centralization, or that's if anyone has good ideas around what's the end game for stablecoins, I'm happy to have a chat, because I haven't heard any really good answers or really good arguments around that.
Yeah, I think one interesting point here that you mentioned that we need more intermediaries, but the whole point of having stablecoin is not to have too many intermediaries. So I know that you're still looking for answers, but do you have any thoughts on how we could solve this interoperability issue without actually adding more intermediaries? So going back to the problem that we are trying to fix.
Well, I think the market will take care of that. There's going to be, I said, like it looks like there's going to be less stable coins, but now everybody's trying to capture their market share, trying to win some part of the market. And actually, I think there's if you look at the stable coins, there's currently like 3 different wars going on. There's a chain war, which chain will move the assets when institutional parties, banks, TradFi enters the game. They are a little bit divided, like whether they use open permissionless blockchains or something like Canton, or what's been kind of a hot topic lately. And of course, then we have the asset war. What are the stablecoins that will survive in which market? And then we have an orchestration war, like who's going to facilitate the stablecoin movement. So I think it's kind of and there's kind of a little bit disruption going on. Everybody's looking for market share, and eventually markets will take care of the interoperability as well.
Yeah, and I think indeed, like on one side we have the, let's say, the chain battle, but then on the other side there's also the conversation around denomination of stablecoins. So we see that the majority of stablecoins right now are US denominated, but on the other side we have different countries who are trying to push their own local currency. But in your case, you tried to do something different, which is launching a US denominated stablecoin in the UAE itself. So what is the purpose of USDU, and why a US denominated stablecoin in the UAE?
In UAE, there's like a few $1 trillion of trade flows happening with the USD annually, and it's a massive trade hub between all corners of the world. So I think having a locally backed, locally operated, locally regulated stablecoin gives an opportunity for a lot of the local institution, banks, governmental or near-governmental projects to start entering the digital asset game using locally regulated dollar, which holds reserves in UAE. And I think that's a fairly kind of a good advantage for us, that we hold all our reserves in Tier 1 UAE central bank regulated banks, and so we are not exporting our money to overseas. And also there's a alternative kind of a monetary policy, kind of a little bit more neutral based here in UAE.
Yes, and on your side, Kate, I know that you have stablecoin payouts as well available inside the app, and of course, if you consider the MENA region as a whole, there are a lot of like remittances happening. What is your plan in integrating a variety of stablecoins beyond the USD denominated ones?
As of now, yeah, we're USD denominated, but we are, looking to bring in euros, because that's also quite a popular currency for us globally. We already operate. We are already operating globally, and we're servicing over 190 countries for payouts, pay-ins. So I feel like we've kind of nailed the aspect of, especially in the MENA region as well. Like, let's talk about UAE. I would say 99% of people in this room are not from the UAE, and so at some point in time, you need to transfer your funds, whether it's back home to your family to pay bills. And not only that, a lot of people work in remote jobs, and what I'm seeing is there's a lot of founders, a lot of business owners who are already, for example, on KAST or other neobanks, and the neobanks are, solving their pain points in terms of, paying bills, paying their employees, sending money back home, and I feel like that's where neobanks do play a very important role in facilitating that. But we do have plans of bringing in more denomination.
Yeah, and you said that you serve a variety of customers, and of course every customer may have their own needs, their own habits, because everyone comes from a different country. And also something that I think KAST is doing very well is indeed simplifying the experience of the user without making feel like they're actually interacting with the blockchain, which has always, let's say, been the goal in crypto as a whole. So how do you tackle the difference of habits of countries, but still managing to keep the UX in one app for everyone?
Yeah, I think, again, like it's different based on which region, which country, but because we offer USD bank accounts for every user who signs up on KAST, that already kind of simplifies things. So you can transfer in money through crypto, through your wallet, but you can also transfer in fiat to KAST using a bank account, right? Next week, we're introducing Swift transfer-ins, but we've been offering off-ramps to a lot of different countries globally. And it just kind of looks like, if you open the app, it just looks like you're using a normal banking account, right? Like your Revolut or Rio, per se. So that's the point. Yeah.
And when we look at the broader market and let's say the next wave of stablecoin adoption, we have a question for you. Juha, what do you think will be the next market segment that will be onboarded in stablecoin? So is it payroll? Is it cross-border payment, which is the biggest right now? Is it institutions? Where are we going next?
I would say there's two parts. As you mentioned, like trade flows, cross-border payments are the rapidly evolving and high volume game. And earlier mentioned like a local stablecoins, and I think the local stablecoins will play larger role in the stablecoin and money flows. Part of the kind of stablecoin sandwich, you're collecting. It's kind of replacing fiat rails and correspondent banking with collecting money in, for example, South Africa, and then sending the money via stablecoin rails to, for example, South Korea, and then paying out locally. And I think in that flow, the local stablecoins will play a larger role. And I think another part is when banks and larger institutions, TradFi, they are entering the market and start heavily utilizing stablecoins. That's going to grow the market significantly. So I've had this old thesis that if you look at the traditional crypto market, it's currently like a 2 trillion market cap. When kind of institutional digital asset market starts truly adapting digital money, it will tenfold the traditional crypto.
And on your side, Kate, perhaps a more challenging question, but as banks as well, we start either issuing or distributing stablecoins, how do you see the role of KAST evolving? Do you think that, do you see banks as competition in this case, or do you think that the market will be big enough for both to exist?
I think we need to coexist, right? Because even when we deal with stablecoins, it's not like we're completely dismissing fiat, and the role of banks, help us to enable these type of transfers and allow users to fluctuate from stablecoin to fiat. So I think in the long run, banks, they all have obviously maybe their own stablecoin and things like that, but will coexist and just make it a lot of a better and advanced ecosystem.
And to the question of before, where do you see in your case the next wave of stablecoin adoption going?
I do hope, I think we already see institutions within the financial space come in, but I would love to see more multinational corporations, because if you think about it, all their treasury teams are probably looking for ways to repatriate cash to their home country. And I think with regulation becoming a little bit more clear, that would help a lot of these And we already see it coming. Like I'd like to call out like Stripe, for example. They've been helping a lot of businesses who are not only in one country but multiple to try to enable stablecoins. And I think we're going to see more and more of these type of ecosystems and people who are or companies that are not in traditional, the financial sector come in. And I think that's where the true adoption comes into play.
Yeah, I think that side is like super interesting. I was recently speaking with the Western Union, and basically what they're doing is that also they're going to issue their own stable coins, but of course they have a slightly different role of what a traditional bank does, right? Mm-hmm. But in that case, if companies like them or like MoneyGram or like Deal start having their own stable coins, they basically have a completely other, they already have the trust, they already have the market. So I think probably the most interesting thing for me as well is that we are going to see what usually fiat currency was treated as a currency for a specific purpose. So stablecoins will not longer only be a medium of, let's say, trading, whatever that exchange may be, but also used for loyalty, used for customer acquisition in many different ways, and also yield generation, which kind of leads me to the next question. I know that you integrated a vault with Gauntlet as well to generate yield. What are your thoughts on yield-bearing stablecoins or integrating yield option?
Absolutely, and I think it's very important because we're the distribution of these vaults and these yield-bearing products. We currently have 2 vaults, and because we're customer-facing, we have to be very careful in terms of what vaults we do bring on, especially what happened in DeFi a couple of weeks ago. We know for a fact that we need to be very careful in terms of the product, but I think it is a big demand. Like, we have over 1 million users now after 20 months being live, and we do see a lot of deposits going into our earn. So neobanks are playing, they're the bridge and the connectors of these tokenization products, and we do play a very important role in this because people do want access to our tokenization products that in the actual world you can't get access to. So we do see demand there, but we just have to be very careful as to what we offer to the users.
Anything else on your side, Juha, on yield?
Yeah, I think yield-bearing stablecoin has been a little bit problematic due to the regulation. A lot of the regulations has kind of forbid yield-bearing stablecoins. But of course, yield is a super important factor of any capital markets, and especially given this RWA summit, I think one of the interesting topics is when you're having your asset token, for example, real estate asset token, if you can use it as a collateral for borrowing money, lending money, so using the modern vault technologies. So I think it's a super kind of a critical part of the how the ecosystem works and how the RWAs work. They need to be freely movable between lending markets.
Yeah, I think we touched upon a lot of different points that eventually will take us a whole day to really dive deep into all of them. But for now, this is it. Thank you very much, Kate. Thank you very much, Juha. Thank you very much, everyone, for listening. And hope to the next episode.
Thank you so much.